I think this is a very good company. It's probably maybe certainly when we looked at it had a number of characteristics which were slightly different to Handelsbanken. And the first was the company is called UTV, which stands for Ulster Television. The first thing was it was very poorly covered by analysts, almost really very little interest in it. The second thing about it was it had a rather checkered previous history because it had borrowed a great deal of money and basically had very nearly gone bust. So that I think had put people off. When I began to look at it, I think it also, because of the lack of analysts coverage, it felt to me that people didn't really understand that it wasn't actually a television company, it's in fact a radio company. It is called Ulster Television, but in fact 70% of its profits, and I would say higher than that of its value, is in radio businesses. It has a number of radio businesses, but let's split them into two or three. It has a business in Ireland, Southern Ireland, the Republic of Ireland. Now, that business, the profitability of the Irish radio business is halved in aggregate. That business, however, has been very steadily maintained its margins and been very profitable in what has to have been one of the most difficult economic environments that a business could operate in. Now, to my mind, I have no view as to when the macro is going to get better in Ireland, but if a business can operate, albeit its profitability has gone down, but if business continues to operate with very good metrics in that sort of environment, well, that's a pretty good definition of a moat to me. So that was attractive. In the UK, they bought a business called Talk Radio, which is Talk Sport, is the thing. Now this business they've built and increased such that it has a very, very dominating position in the UK. And what's also interesting is the audience demographic is extremely favourable to advertising because it's young men or men between 15 and 35. And apparently, I don't know a lot about advertising, that's a demographic that's relatively difficult to get hold of. And in their case, they've done very well. And the business has been very profitable so that's the thing. So it seemed to me that people had not understood how strong that franchise was. And if you did a really simple valuation of radio assets in UTV and looked at what prices they changed hands at in corporate transactions, you could get a valuation when we bought it, which was upwards of twice what we paid for the business. If you look at so that was the business itself. If you look at the management, this is a bull and a bear case. The operating management have been there for quite a long time. The chairman and various of the board have recently, there's been a real bust up. The exact details are not obvious, or certainly not in the public domain as far as I can find out, but there has been a bust up. That took place, as it happens, after we invested. It didn't affect the share price dramatically, but the operating management, who have been responsible for certainly the radio transactions, are still in place, and so we like that. The valuation at the time, I talked earlier about the debt. They've been paying off debt such that it's come down from, I think it was about 4.5 times EBITDA down to 1.8 at the last December year end. That's through steady cash generation, which they've continued. Although looking forward, a slight bear point, I suspect, I think they've begun to grow the business through reinvestment and buying new licenses. We can argue the toss. The valuation, 6.5 times earnings. Yeah, to me, that's just being given away. And the dividend yield was about 4.5. The dividend, they'd reinstated the dividend a few years back because of when they were really up against it. Clearly, they passed the dividend completely. But they have made they've stated they're going to grow their dividend fairly steadily. To me, that's a very interesting. When I compare it to Handelsbanken, why do I'm not convinced that the growth opportunity in UK radio is as substantial as the growth opportunity I can see in growing a branch network for Handelsbanken. But at 6.5 times earnings, the free cash flow yield was probably 12 or 13% on EV at the time. It just seemed very, very cheap. And one other thing I talked about diversification. When we add a company to the portfolio, we do not in a very highly technical sense, but we do look at its economic exposures and its geographic exposures. And as it happens, we don't have much exposure to the UK consumer. It's an advertising-led business, so that was helpful at the time that we did it.